Hey everyone, I'm trying something new today, showing one of my options trades from start to finish. That is, from the decision to place the trade, to actually placing the trade, to managing the trade, and finally to closing the trade. So I had this idea to show options trades from start to finish in a compressed format. So normally, you put on an options trade and it might take days or weeks or even months possibly for the options trade to play out. You put on the trade and then it might be a while before any action happens. To show you the viewer a complete options trade, but to cut out all that boring stuff in the middle where it's like watching paint dry, right? Watching the trade unfold, watching premium decay, compress the timeline of the options trade and package it up into one short video that you can watch. I'm not only going to show trades that were winners, but I'm also going to show trades that didn't work out so well. I hope to have a variety of types of trades, whether they be wheel strategy type trades or other option strategies. We're starting out with an interesting one, a put ratio spread on SPY, the S&P 500, where I was able to get 25% of the max profit in 2 days, actually less than 24 hours from when I placed the trade to when I closed the trade. That's a great start, and I thought a really interesting trade to start this new series with. Let's get started. All right, so the options trade I'm talking about today is this put ratio spread in SPY. I put on this trade yesterday, which was Monday, January 10th, and it was an interesting day in the market because the market was down big, and then later in the day had a huge reversal and ended up not positive. The S&P 500 didn't end up positive on the day, but it was pretty close to it. When I put on the trade, SPY was at $461.80. The IVR, the implied volatility rank, was 36.4. Implied volatility was elevated that day, my friends. And I put on a put ratio spread at the money. Let's check out how I put on that trade in Tastyworks, which is my brokerage. So I'm going to cut to me yesterday deciding to put on this trade. Here we go. Monday, January 10th, big down day in the market, uptick in volatility. And I think today might be a good day to do something in SPY, S&P 500. And I'm liking the idea of a ratio spread. And I want to sell something right at the money. If I can sell 2 short puts at 460 and do a spread, a 461, 460 put spread to offset that a little bit, we're looking at around 940 credit. By definitely elevated volatility today. Price has been trending down. I feel like this could be a point at which we bounce off, but of course, who knows? I'd like to get 940 for this. Let's go ahead and do this. The market's already starting to rally here. I hate to chase it, I really do. All right, let's go down to 930. See if we can get something done down here. See if we can get it done at 930. Whoa, too many dings there. Where are we at? Okay, we're filled on the ratio spread, 931. And I recognize there's some significant risk involved here because I've got those 2 short puts and a short put spread. But one of those puts is naked. And so, that's kind of a pretty big matzo ball hanging out there if I needed to buy those shares at $460. But that's not what I'm planning to do. Even if this trade goes south, I'll just manage it as a short put and I will roll as necessary. All right, so let me log this trade at 61. One of them, 9.31, I believe was the credit I received for collateral. I'm going to say it's $46,000 in SPY if I had to buy those shares at $460. And expires on the 18th. I have a lot of positions expiring on the 18th. So it's going to be an interesting few weeks ahead. So you saw the trade go on yesterday, January 10th. The price of SPY was $461.80, thereabouts. The implied volatility rank was 36.4. I put on a put ratio spread that was at the money, so just under the at the money price, and it was expiring in the February expiration cycle, February 18th. For this, I received a net credit of $931. My max loss would be almost $45,000. That is, if I were to take assignment of the shares of SPY and they were to go to zero, which wouldn't happen, but that's the theoretical max loss. My max profit would be $1,031. That is if at expiration the price of SPY ended up underneath this little green tent that you see there where it kind of pokes up. that's right where that's the optimal place for the trade to close at expiration. If I were to hold it all the way to expiration, if it were to close right at 460, that would be the most I could make, which would be $1,031, because that would mean my put spread would expire worthless, and my my extra short put would also expire worthless, and that would be the most I could make on the trade. Now let's cut to the next day, Tuesday, January 11th. All right, it's Tuesday, January 11th, and I'm looking at this SPY put ratio spread I have on because SPY's up a little today. More importantly, volatility is down, and overall the position is already up 23.5%, closing in on 25%. I feel like 25% in a matter of 2 days is way ahead of schedule, and that is good enough for me to close it out. My profit target was 50% of max profit, but if we hit 25% in 2 days, I mean, you gotta take that off the table, I think. So, I'm gonna put in a closing order, good for the day, to close the whole put ratio, marking it 7 on 720. I want to close it out at 7. Net debit $7. Time in force is today. Put that on, and that order is working. And we'll see if I get filled. Be a nice quick 25% profit on the SPY put ratio spread that expires on February 18th, 38 days from now. IV rank of SPY right now is under 28. If we zoom in on the candles, see we may have bottomed out here short term. I threw back on the microphone and fired up the screen recorder in hopes to capture the put ratio spread being executing at my limit price, but we missed it. It just happened. But if I pull up the chains here, you can see I sold this put ratio spread for $9.31, buying it back for $7. That's a $231 profit and 25% max profit. Closed out for around 25% of max profit. Yes, I probably could have held on to this and captured more profit out of this, squeezed a lot more juice out of this lemon. But again, you got to think about, selling options around 40 days to go, and you can get 25% of the max profit in 2 days. And considering that my plan was to, no matter what, if it reached 50% max profit before 21 days or by 21 days, I was going to close it out anyway. Well, I got half of that performance in 2 days. Again, it's one of those things. It's a little hard to do. It is. It's hard to do when you think like this position is just going to probably keep being a winner. But the good news is I have enough long SPY positions on in other places that I'm not really too concerned about. Put ratio spread, and a 25% winner is a 25% winner. I will take it. If I go to the options tracker, here it is, put ratio spread, close it out for $7 on the 11th. I'm going to drag down this information. Okay, so 2 days in the trade, and I'm going to drag down these formulas. There it is, $231 profit, $116 profit per day, 0.5% return on capital, and that's based on 46,000. And annualized return on capital is over 60%. So very, very good trade. And I'm just going to put in the notes, good trade, closed for 25% max profit in 2 days. All right, so that was interesting. So the next day on January 11th, SPY was now at 466.50, up about $5 from where it was the day before when I placed the trade. And IVR also contracted down from 36.4 to around 28.2. So both of these things, the share price or the price of SPY rising and the IVR falling, helped my position quickly, very quickly, to achieve that 25% max profit in only 2 days. So let's check out the order chain here. This is the initial trade on the 10th. You can see the 1 long put, the 2 short puts, and the total credit received of $9.31. And then the next day, closing the trade, which was earlier today, this morning, closing the same trade for $7 debit, and Then the total P&L for this trade was $231. That is the difference between the amount of premium I collected, $931, and the closing price that I paid, $7. I collected the difference, which is $231. This is a great trade. I really like, I think I like put ratio spreads. We'll see. I've only put on a few of them so far, but so they're new to me, but so far it's been working out. So I know they're the type of trade that you want to put on with higher implied volatility. When you have a bullish bias, but not super bullish. Interesting trade, I think, the way that profit and loss graphs work, where you have a lot of potential. If it goes up, great. It can go up as much as it wants. That's fantastic. It can go down a little bit and you make even more money. And then there's a pretty long slope until you get to your break-even point at expiration. So yeah, I think I really like these put ratio spreads, and I expect that I'll be doing more of them in the future. All right, that's all I have for you today. I hope you enjoyed that, showing an options trade from start to finish. If you did, please give this video a like. Consider subscribing to my channel. Thanks for watching.